Welcome, and here we're looking at the S&P 500, and it's been very messy over the last few days here, and the Dow Jones has even been worse than that. But the trend is still up, and we are looking up around these sort of numbers here for the completion of this particular trend. So essentially, in the meantime, long as it pretty much stays above this current low here, then we'll see this eventually move up. But as I mentioned, it's choppy. The other thing here too that we need to understand is that in terms of the trading levels scenario, we can look at this in terms of the classic trading levels pattern, which is the arrival, the reaction, finding support, and then the first high above the level, and then the A, the B, and the C correction, and then moving up from that point. And as this structure here is moving up, we're looking for wave 1, wave 2. This is all part of the little third wave in here, with the fourth back into here and the fifth up through to here. So there is more to go there. So it's just a matter of here. This is the chart we've been working with on the 1 hour through here. So we may see a little fold back into here to the wave 4 of one lesser degree before we see a move up through here. So the 1705 for intraday traders as retested resistance is what you'd be looking for there. But while it's above the 1705, then we can look further up through there. We do have nice accumulation process through this point through here, offering support there. Still, as you can see, still to the upside, just a little messy through here. And looking at the US 30, it's on the 4 hour chart here, the same wave count, the 1, the 2, the 3, the 4, and looking for the fifth up here. It's just that this has been a bit volatile here, as you can see through here. We've got the European markets folding off through here, placing a bit of pressure. But look, the next time that this finds support on the 15,630, then that would be the upside from that point. Otherwise, it will be searching for lower ground. The European markets, as I mentioned, are a little bit softer, and once again, we're looking for the same sort of pattern here. However, where are we here? Just grab my little drawing tool. So we're looking at this as wave 4 here, and we're looking for this as a wave 5 up through here, and that wave 5 may be in place there. It seems a little bit small in relationship to the wave 1 here, but we would have to count that as the 1, the 2, the 3, the 4, and the 5 here. But it may just be wave 1 here as well, because this move that we've got here, as you can see, is in 3 waves. So until it takes this low out here, we would need to treat this as an A and a B and a C wave that's maybe not finished. So we're looking at that for another move up higher here. But look, if these lows here get taken out, well, then we're going to see a larger corrective pattern unfold across the 6-5 here. So just drilling into here, this is the DAX as well. The DAX has got the same sort of pattern as well. We're looking for the wave 5 up there. If we're looking for the 100% move, then we would be looking at this being here as such, like this here, and this here would be considering this a little wave 4 here. So we'd be looking at this here in terms of the 1 and the 2 into here, the 3 here, the 4 pulling back the 38.2 retracement level, and then this move up through here. So that's what we're looking for there. The Australian market, is a bit of a mix between the US and the European markets, but the way that I sort of see this is that it's a little bit tricky to counter. This is extremely messy here. I can take guesses at it, but what we have been doing is just been trading the level through here. It can also be counted, this being a top of a third wave here and a fourth wave looking over here. as such as well. So there's a couple of different ways to count this. So it's a little bit tricky, but what we can do is we can just keep continuing to trade the price, and even though that this is like unclear up through here, we'd have to look at this as sort of a wave 1 and a wave 2 here, possibly a wave 3 and a 4 to here, but we just get overlapping wave structures here, so it's a bit pointless. But we could see this move up here yesterday, and what we're expecting here was a correction across this particular level through here, and that's basically what we're getting. So we can see that this is a positive move up through here in terms of 5 waves, so we'd be looking for an ABC counter trend here, which can take that back to the 50-60% through here. So it could end up anywhere through here, and the thing is, Tuesday is normally profit taking in the morning, and it can regain its strength and support and then move up from that point there. We do have the Australian trade figures coming out today at 11:30, and we also have the RBA's cash rate coming out at 2:30 as well. So they're going to be the headline drivers for today. But you know, the other point too is that Wednesday and Thursday are normally the swing days because they bring the most announcements out, generally speaking, across the world. So you know, the main point is here, I guess, is that just to really allow this to, you know, to play out through here. Well, that's the 61.8 retracement level here. Just allow that correction to play out, you know, and if it ends up being in 3 waves and we see a move up here, that would give us overlapping wave structures here, because that would only become 3 waves once this had moved up through here. So that's what we'd be waiting for. So I think just allow this correction to unfold here, and then we can look for support on this 5-1 here for any move higher from that point there. So just be a little bit careful, and you know, if you're going to be trading, just trade the sub levels, which is group 2, the midpoint, and group 1, so to speak. So yeah, you know, just last, you know, you can see it. This is the cash market here as well. You know, we can see that over the last couple of days we're getting lower volume through here. We can see this is a bit messy through here. I know that this is like up for 1 here and back for 2 here, and then we've got like 1, 2, the 3rd up through here, the 4th into here, and the 5th sort of up through here. So I know that we're near a top here, so it certainly wouldn't surprise me to get some type of, you know, corrective pattern back into the 5,000 here before we see further upside. You know, yeah, so I don't know. It's just a little bit toppy, and caution is required there. Alrighty, let's have a look at the commodities. Okay, starting with oil, and most of the other commodities are like this as well, in terms of this particular move that we've had up through here, looking at as wave 1, and this is an A and a B and a C back here for wave 2. It's moved back to the 50% retracement level. It could move back to the 105 here as well, depending on what stock does. So just having a closer look inside of all of that. So this particular correction, that after we've got our 5 waves up through here, this is the 50% retracement level, and of course this would look as the ABC correction from here, the A wave, the B wave, and the C wave here. This would be wave 1 up through to here. This would be the A, the B, and the C back through here, and then we'll be looking for the 3rd wave up and the 4th wave up, and so forth. If this is so, you know, the 106.50 finding support would be step 1, and then the 107 and the 107.20 finding support would be the way up. If that doesn't happen, then we're going to be looking at this coming down through here as an ABC coming down here. So it will be the A wave, the B wave, and the C wave in 5 waves to this point here, and then we move up from that point. So it's very important that this block here, you need to be, this is where the most volume is going to be turned over. You do need that as support, through here somewhere. So you need to build on this point through here if that's going to be the case. And of course, stock would need to go into that particular direction as well, the S&P 500 and so forth. Well, it would be helpful as well. And also the US dollar being on the right side as well. This is the same for the gold market as well. Here we've been looking, we mentioned yesterday that, even though that this moved down, it still looks at the whole thing corrective. I guess one of the best ways to see this is with silver, and I think I may have pointed this out or not, and I know this is complicated, but the point is that this has moved down, but it's got overlapping wave structures. These lows and highs here, just simply put, are all overlapping each other. So it makes this, it just makes this this whole thing through here, just all of this just corrective. So if it is corrective price action, well, then we'll see further upside, and the further upside would come as this being wave one, a bit like oil there, the A, the B, and the C. That could come down further there as well, and then we'd see this move, higher up through here. So there's plenty of time. It's just this, this is the sort of the resistance sort of area through here, so you need it on your side. So obviously being support on $2,020 would be helpful. However, if you see support building on top of the 1980, then you can work in from build in from that point. Even on the 72 as well, you could build on from that point, but just understand that there is slight risk there because the weight of the whole thing hasn't shifted to the upside. So that's the same with gold here as well. You could take the risk just to buy off the low here. A little bit unsure about this, where this wave one here, I've got it pegged here, but it could certainly be here as well, and then that would make this the A, the B wave, and 5 waves for the C wave, and then we push straight up from here. So that's interesting as well, and having a closer look at that here, this is how I'd label this here. So this would be the 5 waves straight up to here. This would be little A, B, C for the A wave. You can see that this is in 3 waves here. The only other way to put this is wave 3 to here, wave 4 to here, and wave 5 to there, but I don't know, it seems to count better this way. So any long trades here would have this, under this previous low through here, but I think it's safer to get the weight to be shifted, which would be through, here, so, it's got to prove to you that it's going higher, so, the most expensive part of a trend is the it's the 10% at the bottom and the 10% at the top. So, you just want to take safe bets. You need to get, losses are okay, but, they just take too long to recover from. So, okay, so that's it. The soft commodities, the corn, still sort of chuffing to the downside, and this is quite clearly for us a wave 4 here, and we're looking for 5 waves down through here, and we're in the 3rd wave here. There's one little wave structure that I'm not sure about in here, and I'd just like to talk about that for a moment, because each wave structure, wave 1 through here would have 5 waves in it. That's not a problem. And in from wave 2 down to wave 3, that will have 5 waves in it as well. And it does appear that from this, at first glance here, we can see that this is down for 1 and some type of correction here for 2, down for 3 and back for 4 and down for 5, and there will be 5 waves in this section here as well. Once that's done, it normally pulls back to the wave 4 of 1 lesser degree. Wave 4s we don't normally trade because they're normally sideways. Well, you can look at one here, always sort of more sideways and overlapping and complicated, so you're just never quite sure how they're going to pan out. And when you've had a strong move down, then it's a strong event, and it's either going to be, the recovery is going to be short and swift and sharp like wave 2s are, and if that is sharp and swift, then you can expect wave 4 to be sideways and complicated. And we can see by this larger pattern here, it is the wave 4. This is the fingerprint or footprint or whatever of this particular personality or whatever of this market, and that's what we can expect in here. But That said, there's just a little complication in here in terms of counting this down, and I just want to point that out. And this is how it is here. So this is on the 2-hour chart, the wave 2 here, the wave 3 moving down through here. And at first glance, it looks really quite simple because, in this particular structure, we would be looking at, we're looking for a 5-wave structure to the downside here, and shouldn't be that complicated. So this little structure here, how can I say this? I'm not sure if this is one way of counting it. This could be 5 waves down for wave 1 to this point here, okay? Then wave 2 to here, wave 3, 4 and 5. I don't have a problem with this situation here, but this is where the problem begins here, because this here could also be this little wave 1 to here, and then this wave 1 would be over to here, this wave 2 would be to here as such. So that means that there's an extra wave in here that needs to be viewed in terms of this one here. So this which changes this down here. So instead of having this low here, we're not there yet. This should all just be the wave 3 here as such. So this would be wave 3 here, this would be wave 4 here, and we're still looking down for wave 5 here. So we would be looking for another move here, then another one down through to here for this one, then the move back up here for this wave 4, and then wave 5 down through to here. So it gives us a bit of a double zigzag, and this is how it pans out here in the bigger picture here. So this is the more complicated one, and it's possible. So what I'm saying here is that we may get a double whammy here in terms of 2 degrees of wave 4s here before we get a move down into closer to the 400 here. So it's going to be a bit complicated. That's the bottom line through here. Now, in terms of trading this here, if the 72, if you're being short down through here, and if this finds support, it'll retest it. If it finds support, getting the first might find support there, but it may even come down a bit lower and then eventually sort of work across here. But if it finds support here, then that will be the first inkling that you've got this trend up coming up through here, and it should pull back to the 4th wave of 1 lesser degree through here. Once that's been established, then we should see, and that this move up here would be at minimum in 3 waves like this here. It may get a bit more complicated than that. This particular structure moving down here would be in 5 waves, so this would be tradable down to this point through here. But from this point, we'll either get 3 waves back up here, being a part of this structure here, and then moving further down, or we're going to get this extra little move back up into this area here, which will also be complicated as well. Whatever happens in this wave 4 will be a larger picture here. So this is 1 degree higher than this one, but they will be pretty similar in terms of their patterns through here. So it's something that we have to navigate through, and it can take a good week or so to get through that. Alrighty, let's have a look at FX. Okay, for the euro, I just really want to keep it really simple at this point in time, because we've got this previous high over here, and we do have a 5-wave structure down through here. So I really just want to keep this simple. If we get support this time around, now that this market's tested lower through here, if we get support on 13272 there, the 72, which is an important number because it's 272. Don't ask me why, it's just the way the cookie crumbles. So 772 or 272 just carry more weight, and and that's exactly what's sort of happening here, for this. So look, support on this price point here creates long trades. It's simple as that. So I just really want to leave it at that point there. The flip side to this is the US dollar at 82. So that on the retested resistance, and this as support here would help verify that to the upside. The Australian dollar is pretty much on track with its wave 4 bounce here. So so where are we? Here we go. So we're looking for 5 waves down, from wave 4 down to wave 5, and we've been, in this wave structure down through here. Got a little bit complicated in here, but I feel that we've got this now at wave 3 and wave 4 coming in here. The 38.2 retracement level is just above the 90 here, so anywhere up to there, or the previous wave of 1 lesser degree through here, and we'll be looking at some type of A wave, B wave and C wave through here. This A wave will probably top out at 2:30 today with the RBA cash rate coming out at 2:30 p.m. So they're probably running this up. So if they're running it up like this, the bias is they expect no change. So would see it move up through that, and and there's a good possibility for that too, because there's positive figures coming out of the US, and reducing the bond buying there would be an indication that there's no need to cut rates any further, because what they're doing so far is working and driving the dollar down. But look, one way or another, this wave 4 here, as you know, they can get complicated, but we'll just play it out as a simple A, B and C at this stage here, and this is the target area up here for the 90 up through here. In terms of trading this here, well, if you're above the 90 on this retest here, that would have been perfect here. The next step here, of course, is finding support on top of group 1, the subgroup 1, the 89.30 through there. These wave structures that are coming up here, this is in 5 waves. This is developing into 5 waves, so we're going to be seeing it move up. Don't worry too much about this little A wave here, because I can see this is moving up stronger through here, so we may end up with something of this nature here, the 1, the 2, 1, 2, 3, 4 and 5 up here for the 3rd, the 4th here, if we're going to get 5 waves up here, and something like that. Or if we get to here, then we'll have an A, a B and a C back to here, and then up to that point there. So it's wave 4s get messy. What can I say? There's not a lot you can do about it. You just need to trade the sub levels and trade what you see. But it looks like we're going to get a positive run into the 230 cash rate there. So alrighty, well, good morning and good luck.